I'd like to start off by welcoming you for the first time to the Forex Gemini blog. During the next few weeks, I will be giving you an over-the-shoulder peek into how I, Muteki Trader, trade successfully day in and day out in the Forex markets. But before we can get further into the system, I'd just like to sit back and take a moment to give you a simple, general overview of the system that I have created and will be teaching you over the next few weeks. To further understand the system, we must understand that the system is compiled of three key elements I have found drive the Forex market. These three key elements are 1. Technical analysis, 2. Fundamental analysis, and 3. Interpretation of volume present in the market. Over the next few days, we'll be focusing primarily on technical analysis. And since our technical analysis is based strictly on Fibonacci, we have nowhere to go but to the main man, Leonardo Fibonacci. Born in Pisa, Italy, was a mathematician, studied laws of nature. Naturally, we must follow the Fibonacci sequence to find success in Forex trading. As we can see, one key part of nature, being the seashell, is distributed mainly upon the Fibonacci retracements, which Fibonacci retracements being the center where the move is created, leading out from the 382, the 50%, and the 618 Fibonacci. As we can see, these Fibonacci retracements are better seen in nature and in everyday life. These Fibonaccis create a zone for support or resistance in moves created north or south in the Forex market. Fibonacci is followed in every day in life, including in our body. As you can see, we have every part of the Fibonacci retracement, consisting of the 382, the 50%, and the 618 Fibonacci retracements. Okay. Now that we have established the points of the Fibonacci retracement, being the 382, the 50, and the 618, we must now learn how to apply this theory to current market data, or in this fact, previous market data. So we are faced with the fact, as you can see on my chart, where we have a movement south. Now, we would like to see where this movement south is going to retrace to before it can continue moving south. And what would be a better place for this movement to retrace to before it continued south other than a Fibonacci sweet spot retracement zone? So we take the top of the movement and we take the bottom of the movement. Now we place our fibs and we see respect around the 382 Fibonacci. Now we see the market moving up towards the 50% retracement Fibonacci. Now we're expecting one of two things: that from the 50% Fibonacci is going to turn and continue its move south. If not, it is going to retrace up to 618, hit the 618, and then continue its move south. So we move on along and we find very big respect of that 50% Fibonacci. Why? Because 50% is a sweet spot of the Fibonacci retracement zone. So as we continue looking onto the chart, we see that it breaks our zero mark here and it continues trading south. Since we have established that movements in the Forex market will always retrace to a Fibonacci sweet zone, not knowing which it will be, the 382, the 50, or the 618, we must be prepared with every situation we face live in the Forex market with what we have been equipped with. And since to this point we have only been equipped with Fibonacci retracements, we must take the current movement that we see in the charts being south and shoot the Fibonacci retracements for this movement. Now as you can see, we take the movement from top to bottom. Now we sit back and we wait for respect of the Fibonacci zones. Now as you can see as we continue on, that this movement is strictly respecting the 382 Fibonacci. And from the 382 Fibonacci, we see what we expect, and that is clear movement below the 100% level of the Fibonacci retracement. So now what we're doing is waiting for this movement to retrace, which we are now seeing live happening in the market. So what we're going to do now is shoot our Fibonacci retracements. Now from this point, we've established two key facts in the market. That one, this currency is moving down. Two, where is this currency moving down from? It's the 382. So let's not now see if we can get respect of that 382 and make a new low lower than the zero value that we have present on the chart. As we continue on in live data, we see that the market has spiked up and nearly to the pip reached the 382 Fibonacci. Now from that 382 Fibonacci, may you ask, where is the market going? And my answer may be only one, and one only: south. Once it clears the zero mark, it is going to produce substantial lows in the market. And there are those substantial lows in the market.